Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Okay, so let's jump right in. I think we have to start by just acknowledging the sheer energy around this company right now.
Oh, absolutely. It feels different this time, doesn't it?
It really does. When you look at the source materials, the scale of what they're building, the financials they're projecting, it feels like the whole business model has fundamentally shifted.
It's a genuine transformation.
Yeah.
And you can see the market reacting. I mean, look at the attendance figures for their big analyst event, up 70% year over year.
70%. That's
Yeah.
not just mild interest.
No, that's Wall Street, that's competitors, that's everyone leaning in and saying, okay, something major is happening here. They're reassessing everything.
Exactly. So our job today really is to unpack what is driving this. What's the engine behind this hypergrowth trajectory they seem to be on?
And it seems clear for the materials, it's not about selling software licenses like the old days.
Not at all. It revolves entirely around this integrated stack, right? It starts with their cloud infrastructure, OCI,
Then layers in the new AI database technology.
and wraps it all up with this completely reimagined application ecosystem powered by all these new AI agents. It's the whole package.
And as we went through the materials, three things really jumped out as, well, kind of surprising, defining this shift.
Okay, what's the first one?
The first, and maybe the most counterintuitive for a cloud provider, is that they've gone from being demand-constrained to supply-constrained.
Meaning they have more customers wanting infrastructure than they can actually build.
Precisely. The demand for accelerated computing for GPUs is so intense they literally cannot build data centers fast enough to keep up with the signed contracts. That's a fundamental shift.
Wow, okay, that's huge. What's number two?
The second is the strategic focus on integrating AI with private data.
Yeah.
Everyone's excited about models like ChatGPT, but the real money, the enterprise value, is using those models on your own sensitive data.
Right. Without compromising security or privacy. That's the hurdle.
And their new AI database seems squarely aimed at solving that exact problem, leveraging their history in database security.
Makes sense. And the third key takeaway.
It's the payoff. The sheer audacity, really, of the new financial targets they've put out there.
Yeah, those numbers are something else.
They're projecting growth based on this whole stack approach, infrastructure, data, apps all working together that's just, frankly, unprecedented for a company this size and maturity. It redefines long-term tech growth.
Okay, quite a setup. Let's dig into that first piece then, the OCI hypergrowth engine and this whole supply versus demand situation.
All right, so the cloud infrastructure business, OCI, materials break it down into four segments.
Okay, what are they?
You've got enterprise, distributed cloud, cloud natives, and then the big one, the accelerator, AI infrastructure.
And they talk about a symbiotic growth model. What does that mean in practice?
It means these segments aren't isolated. They actually feed each other. So you start with enterprise, that's their traditional customer base.
Moving legacy systems to the cloud.
Exactly. But when an enterprise moves, say, a big database to OCI, that often pulls in third-party software vendors, the ISVs.
Ah, the cloud natives.
Right. These ISVs then optimize their apps for OCI, which drives more general compute and storage use. It creates this virtuous cycle of demand.
Interesting. So how are these segments actually performing? Let's start with enterprise.
Enterprise growth is solid, pretty strong, actually 33% year over year.
Okay, 33% is nothing to sneeze at.
Definitely not. But the really eye-popping number within enterprise is their multi-cloud database business.
Multi-cloud meaning running their database on Azure or AWS.
Exactly, making their flagship data platform available everywhere. And that specific part saw growth exceeding, well, get this, 1,500%.
Wait, 1,500% year over year.
1,500%. Yeah. It's almost unbelievable, but it speaks volumes about solving that old data gravity problem. Customers hated being locked in.
So offering portability was a masterstroke strategically.
Absolutely. They basically decided that ubiquity and market share in the data layer were more valuable than locking customers into their own hardware. Clearly, it paid off massively.
Okay, so that enterprise consumption also fuels the next segment. Distributed cloud.
Heavily. Distributed cloud grew 77% year over year. This is all about those regulated industries, governments, defense, finance.
The ones who need sovereign control, data staying within borders, that kind of thing.
Exactly. Sometimes even needing the cloud infrastructure physically inside their own data centers.
And how do they deliver that?
Two main ways. First, dedicated regions. Think of it as a full OCI cloud environment shrunk down into just 3 server racks that go right into the customer's building.
Wow, a private cloud in a box, essentially.
Pretty much. Vodafone, for example, bought 6 of them, put them right next to their telco network for low latency and total control.
Okay, and the other offering?
Is Alloy. This is more of a partner play. It lets a local partner, like NRI in Japan, run their own customized sovereign cloud using OCI infrastructure and applications as the base. They can add their own IP on top.
So it allows for local customization and control. Makes sense for sovereign requirements. These sound like big deals.
They are. Given the complexity, the average deal size here is around $67 million. These are major commitments.
Okay, then the third segment, cloud natives. Growing fast, too.
Very fast, 49% year over year. These are often those ISVs we mentioned, or companies doing very specific, high-scale workloads. They ramp up quickly.
And the deal sizes.
Also substantial, nearly $100 million on average for these cloud-native deals.
What's the big draw for them?
For these companies, infrastructure isn't just IT cost. It's often their biggest operating expense after people. So price performance is absolutely critical. It's existential for them.
And OCI delivers on that.
Seems so. There's a great example in the materials Cybereason, the security company. They moved a big chunk of their workload from a competitor, saved over 40% on their infrastructure spend, just by moving.
40%. That's massive. That goes straight to their bottom line.
Exactly. It lets them reinvest, grow faster. It really validates the argument that OCI's architecture, built more recently, can offer cost savings that older cloud platforms struggle to match.
Okay, which brings us to the fourth segment, the big accelerator, AI infrastructure.
Right. And this is where the numbers get really dramatic. 117% year-over-year growth in consumed revenue.
Consumed revenue, important distinction.
Very. This isn't just booking deals, this is actual usage. And crucially, this metric tracks customers specifically consuming accelerated computing, the GPUs, for large-scale AI tasks, like training huge models or complex inference.
So this is the core of the high-performance demand.
This is it. And that 170% growth directly leads to that supply constraint we talked about earlier.
Right. The bottleneck isn't finding customers, it's building fast enough.
The scale of demand is just staggering. Think about this. In one recent 30-day period, they signed contracts for $65 billion in future infrastructure commitments.
$65 billion in 1 month.
And here's the kicker. That wasn't one giant whale. It was 7 different deals across 4 distinct customers.
4 customers.
And none of those 4 was their single largest customer, OpenAI.
Wow. So the demand is broad-based. You're talking major players like Meta, other hyperscalers. They're all lining up.
They are,
Yeah.
which makes the speed and efficiency of their data center construction absolutely critical.
Which brings us to that Abilene, Texas campus example. That sounded pretty wild.
It really paints a picture. We're talking about a massive site, 1,100 acres, 8 buildings planned,
And the workforce.
over 6,400 construction workers on site every day. That's like building a small town just to build this one data center complex.
Incredible. But the key factor is speed, right?
Speed is everything when supply is the constraint. They started construction in May 2024.
And when did the first customer go live?
OpenAI started running workloads there less than a year later. From groundbreaking to live workloads in under 12 months for this kind of facility.
Yeah.
That's incredibly fast.
How do they manage that? And what about the tech inside?
Well, part of it is efficient design. Each building is huge, designed for a 100 megawatt power draw. But they're all interconnected.
Like one giant supercomputer.
Essentially, yeah. One giant supercluster, designed specifically for the most demanding AI training needs. It allows for flexible resource allocation at enormous scale.
And the cooling. That often trips up these massive builds.
They made a big point about their closed-loop liquid cooling system.
Less water usage.
Dramatically less. The claim was that one of these 100-megawatt buildings uses less water annually than a single-family home in that area.
Seriously? That's remarkable for that kind of power density.
It is. And it's not just an environmental point, though that helps. It translates directly into lower operating expenses.
Compared to traditional evaporative cooling, which uses tons of water.
Exactly. And in water-scarce regions, that's a huge cost and regulatory advantage. That efficiency feeds directly into their ability to offer competitive pricing, underpinning their whole financial argument.
Okay, so the hardware foundation is massive, efficient, and being built at breakneck speed. But hardware is only part of the AI story. Let's shift to the data layer, the AI database.
Right, because having all that computing power is one thing, but using it effectively and securely on proprietary data, that's the real challenge for enterprises.
Yeah, you can't just dump your sensitive customer records or R&D data into a public LLM.
Absolutely not. That's a recipe for disastrous security breaches, regulatory fines, loss of trust. So how do you let these powerful models reason over your private knowledge without exposing it?
And that's where their new AI database comes in.
That's the core idea. They've integrated AI capabilities directly into the database engine itself.
So the AI smarts live right next to the data, within the existing security perimeter.
Precisely. It leverages all the security, access control, and performance tuning they've built over decades, but applies it to AI workloads operating on the data in situ.
The key technology they mentioned was RAG, Retrieval Augmented Generation. Can we break that down simply?
Yeah, it's crucial. With our RAG, the large language model isn't actually trained on the company's private data. That would be risky.
Okay. So how does it access the information?
Instead, it's given permission to securely search and retrieve relevant pieces of information from the private data when needed to answer a question or complete a task. And the key enabler for this search is vectorization.
Vectorization, turning data into mathematical representations.
Exactly. The AI database can now turn almost anything, text, documents, images, video, even things like DNA sequences, into these mathematical vectors.
Vectors that capture the meaning or context.
Right. So when the LLM needs information, it searches the vectors to find the most relevant context. It gets the necessary information without ever seeing or copying the raw original private data.
Ah, so there's a layer of abstraction. The AI interacts with the mathematical representation, not the sensitive source data itself.
That's the critical security and privacy firewall. It allows the model to be accurate and contextual using the private knowledge, but without ever possessing it. It also creates an audit trail.
Makes sense. What are some real-world examples of this in action? The genomics one sounded fascinating.
It really was. It highlights the scale this operates at.
Yeah.
You think the human genome is big, about 3 billion base pairs.
Yeah, pretty complex.
The wheat genome, because of its evolution, it's 15 billion base pairs.
Wow, 5 times bigger. Searching that must be incredibly difficult.
Traditionally, yes. Finding specific gene sequences related to, say, photosynthesis or disease resistance across thousands of wheat varieties could take weeks or months using old methods.
And with vector search?
Researchers can now zoom in almost instantly, milliseconds, not months. It fundamentally accelerates the pace of discovery.
And this isn't just theoretical, they have actual results.
Tangible results. They mentioned using AI to improve wheat photosynthesis, leading to a documented 20% increase in yield per acre.
20% yield increase from AI-driven genetic insight. That's huge for agriculture.
It is. And they even talked about engineering plants to absorb atmospheric CO2 and convert it into calcium carbonate, basically. Sand as a way to manage carbon levels at, quote, no cost.
Okay, that's potentially world-changing stuff. What about more typical business applications?
Equally powerful. Think about business intelligence. Instead of just running reports on past sales, you can vectorize all your customer data support tickets, purchase history, contract details, usage patterns.
Everything.
Everything. And then you can ask the system really complex predictive questions. Like the example they gave. Which of our customers are likely to buy another product in the next 6 months? Which specific product? And what's the best price to offer them right now?
That's moving way beyond simple analytics. That's proactive sales intelligence.
Exactly. It turns data from a passive asset into something that actively guides high-value business decisions in real time, even giving confidence scores on those predictions.
Okay, so you have the powerful infrastructure, this secure AI-enabled database. The next logical step is embedding this intelligence directly into the applications people use every day.
And that leads us to the application layer transformation, section 3. And the pace here is just, well, startling.
What's the headline number?
They revealed they already have 600 specialized AI agents live across their main application suites. Fusion ERP, HCM, industry apps.
600 agents already deployed.
Already live. And get this, 18 months ago, that number was 0.
0 to 600 in 18 months. That kind of speed is... That's nuts.
It shows how foundational that AI database layer is.
Right.
It unlocked this rapid development of specialized agents.
And are customers just using these 600 pre-built agents?
No, they've built a whole ecosystem around it called Agent Studio. It gives customers options.
Like what?
You can build your own custom agents tailored to your specific business processes. You can buy agents built by partners from a new agent marketplace, which launched with dozens of partners ready to go, or you can just use the built-in ones.
So build, buy, or use. Flexible. Is there much uptake on the building side?
Seems like it. They mentioned over 40,000 people are already certified on Agent Studio. And just as an example, during a hackathon at their recent event, Partners and customers built 109 new agents.
109 agents in one hackathon. The community is clearly engaged.
Absolutely. The ecosystem itself is driving the exponential growth in functionality.
What makes these agents different or better than, say, just using a generic chatbot?
Context and security. That's the key differentiator. Because these agents are built on the integrated platform, they inherit the context of the user and the data.
Can you give an example?
Sure, they use the HR benefits agent example. An employee traveling in Europe asks about prescription drug coverage.
Okay.
A generic bot might just pull up the standard company policy document.
Yeah.
But this agent knows who the employee is, what their specific role and tenure are, which health plan they're enrolled in, their current location.
And the specific drug, maybe.
Exactly. So the answer isn't generic. It's precise, personalized, and secure because it's accessing that protected personal information through the secure RAG process we discussed without exposing the raw data.
That level of context is critical, especially in regulated areas like healthcare.
Definitely. And speaking of healthcare, they announced their next generation AI electronic health record, the AI EHR. It's generally available now and fully regulator approved.
Regulator approved already? Getting an EHR through that process usually takes years, doesn't it?
Typically 2 to 3 years, yeah. It's incredibly complex, dealing with 50 states' regulations plus federal laws.
So how do they get approval so fast?
They achieved it in just 6 months.
6 months.
They used AI itself to help with the regulatory process. The AI didn't write the rules, but it analyzed all the different state and federal compliance documents,
Yeah.
automatically generated the necessary cross-references and documentation, basically building the evidence package for the regulators.
Automating thousands of hours of legal and compliance work.
Essentially, yes. A
Yeah.
huge accelerator.
Okay, that's the approval process. What about the actual experience for doctors and patients?
For doctors, it sounds like a major improvement. There's a clinical assistant feature that uses a room listener, like a tablet or a phone microphone.
Capturing the patient conversation.
Right. It listens, automatically handles the charting, generates summaries, orders, discharge notes. The physician basically just needs to review and sign off electronically.
Taking away a huge amount of that administrative burden doctors always complain about.
Exactly. They claim it can give back up to 50% of the time physicians currently spend wrestling with the EHR system. It also incorporates social determinants of health. Things like, does the patient have transportation, access to food, into the summaries.
What about for the patient? How does it help them?
The patient portal gets an AI upgrade too. It uses that generative AI and RAG approach on the patient's own health record.
To do what? Explain lab results.
Yes, exactly. It can take complex lab results or treatment notes and explain them in plain, easy-to-understand English, which helps reduce that fear and confusion people feel when they just get raw medical data dumped on them.
That's a great application. Anything else?
It also helps the patient prepare before a doctor's visit by drafting intelligent, specific questions based on their record. So instead of frantically Googling symptoms,
They go in armed with relevant, context-aware questions, making the actual visit more productive.
precisely.
Okay, healthcare is a huge one. What about other industries? Finance.
Yeah, they detailed a financial crimes compliance agent. This is tackling a massive cost center for banks.
How massive.
Banks apparently spent $155 billion just last year on the processes for investigating potential financial crimes. Compliance, investigations. It's hugely expensive and manual.
$155 billion. Wow. And the AI agent helps how?
The goal is to automate a significant chunk of that investigative workload, potentially up to 60% even in the first phase.
How does it do that?
It instantly analyzes alerts, pulls data from disconnected systems, identifies complex patterns and known typologies of illicit activity, like specific kinds of wire transfers or funnel account behavior.
Things human investigators look for, but much faster.
Much faster and across more data. It doesn't just flag something suspicious. It generates a narrative summary for the human investigator, highlighting all the risk factors and assembling an evidence package.
So the human is still in control, making the final decision.
Absolutely. The investigator reviews the AI's findings, adds their judgment, and decides whether to close the case or escalate it. But the agent does all the painstaking time-consuming groundwork automatically. High-integrity AI, as they put it.
Okay, so we're seeing the pattern. Efficient infrastructure enables the secure AI database, which enables these powerful contextual AI agents embedded in applications.
And all of that together leads to the fourth section, the overall ecosystem payoff and the staggering financial outlook. This is where the one Oracle multiplier concept comes in.
Right. The idea that selling the integrated stack is much more valuable than selling individual pieces.
And the go-to-market has shifted. They're selling outcomes, not just products. The data they presented on this was pretty dramatic.
Let's hear it.
Okay, so customers using just one product pillar, say just applications or just database spend, a baseline amount, let's call it 1x.
Okay, 1x for one pillar.
Customers using two pillars, for example, running their database on OCI infrastructure spend, on average, 8 times more.
8 times more for two pillars. A nice jump.
A very nice jump. But here's the big one.
Yeah.
Customers using the full suite infrastructure, the data platform, and the applications, all integrated.
Yes. How much more do they spend?
On average, 150 times more than the single pillar customer.
150 times 150x.
150x.
Okay, hold on. That number sounds almost too good to be true. Is that just skewed by a few massive customers, or is there a real mechanic behind it? That sounds like marketing spin.
It's a fair question. And they did try to ground it. The argument is that this isn't just adding up licenses. It comes from selling those tightly integrated turnkey solutions we talked about earlier, like Alloy or dedicated regions.
It's where you get the whole package.
Exactly. When you buy one of those, you're inherently buying the infrastructure, the core database tech, and often the Fusion ERP HCM, Service Cloud, etc., all designed to work together.
But you can't easily just use one piece. They're interdependent.
Highly interdependent. Ripping one piece out would break the whole solution. This creates enormous customer stickiness and naturally drives consumption across all three pillars because the outcome they bought requires it. It locks in that high level of spending across the board.
Okay, I see how that structure could drive such a high multiplier. It's about selling an integrated system, not components.
Right. And this holistic view of the customer's operations, driven by the data platform, also enables new business models, like the embedded finance partnerships.
With banks like Bank of America and JP Morgan.
Yes. The problem those banks faced was lending into complex industries like healthcare or construction. It was hard for them to accurately price risk.
Why? Because the data was bad or slow?
Often, yeah. They couldn't get reliable, real-time, qualitative data to understand what was really happening operationally. For example, in healthcare financing.
It's not enough to know if Medicare paid for a surgery.
Right. The bank needs to know, did the patient get an infection and get readmitted within 30 days? Because that affects the hospital's reimbursement under value-based care models, which directly impacts the risk profile of the loan or receivable the bank is financing.
Ah, so the AI data platform provides that deeper, qualitative, operational data stream to the banks.
Exactly. It acts as a wonderful distribution channel, as they put it, for high-fidelity risk data. It allows the banks to move beyond just tracking payments and actually price the operational risk.
Treating investable assets where maybe there weren't any before.
Precisely. They shared a really powerful anecdote about a hospital system that was struggling with cash flow. Based purely on the real-time operational data flowing through the platform, proving its stability and efficiency, a bank was able for the first time to actually rate and issue a municipal bond offering for that hospital.
Wow. So the data unlocked access to capital markets.
It did. And the punchline is, the hospital then used that financing to pay its critical bills.
Yeah.
Including the bill from the tech vendor provided the platform.
A perfect circular economy. The tech enables the financing, which pays for the tech.
It shows how the ecosystem creates value that reinforces itself.
Okay, so all these factors, the infrastructure build-out, the AI database advantage, the agent ecosystem, the 150x multiplier, the embedded finance, it all culminates in these new financial projections.
Which are grounded first in their remaining performance obligations, or RPO.
That's the contracted future revenue, right? The clearest indicator.
Generally considered the best view of revenue to come.
Mm-hmm.
And that number has crossed $500 billion.
Right.
$500 billion.
$500 billion in RPO. How does that compare to before?
It's nearly 10 times what it was just back in fiscal year 2022.
10x growth in RPO in just a couple of years. Okay, that provides some serious underpinning for future targets.
It does. That huge backlog, combined with their accelerating ability to actually deploy the capacity, is why they felt confident raising the long-term financial goals so significantly.
So what are the new targets? Let's start with revenue.
The new target for total revenue is $225 billion by fiscal year 2030.
$225 billion by 2030. What kind of growth rate is that?
That implies a 31% compound annual growth rate, or CGR, between now and then, which is frankly remarkable for a company already this large. It suggests a major re-rating in the tech landscape.
A 31% CAGR on revenue. And what about profitability? Earnings per share?
They're targeting $21 in EPS, also by fiscal year 2030,
$21 EPS.
which represents a 28% CAGR. So the growth is expected to be highly profitable.
They're not just chasing revenue, they expect strong margins.
Exactly. The philosophy they stated was clear. Only pursue growth where there's a clear path to attractive margins that reward the value of their integrated stack and intellectual property. They want the volume to translate directly into profit.
Okay, so just to synthesize this for you, the listener, these really unprecedented financial targets aren't just about selling more cloud servers.
Not at all. They're fundamentally rooted in this tight integration, the efficient infrastructure, the unique AI database capabilities, and these highly specialized AI applications, especially in complex, high-value sectors like healthcare and finance.
It's the whole ecosystem working together, designed to compound revenue at high margins, leading to that 150x multiplier effect.
Which brings us to our final provocative thought for today.
All right, let's hear it.
They talk about the integration of these AI agents and AI-driven code generation, delivering potentially 10x productivity improvements across all software development.
10 times faster or more efficient coding. We hear that a lot.
Right. But if that happens, if writing the actual lines of code becomes largely automated, almost free, does that change what the most valuable human skill is in technology?
You mean if the machine writes the code, what do the humans do?
Exactly. Could it be that the most critical skill shifts away from coding itself towards the ability to precisely declare intent?
Meaning clearly defining what the software should do in unambiguous terms.
Precisely. If generating bad code or mediocre code becomes trivial for an AI, then the human value lies in the intellectual integrity of the specification. Can you define the problem and the desired solution so perfectly, so unambiguously, that the AI can't get it wrong?
So the premium shifts from the how writing code to the what, defining the goal and constraints with absolute clarity.
It's a thought. The value might migrate to those who can master the specialized languages of intent declaration, ensuring the automated outcome is not just functional, but correct, secure, efficient, and ultimately profitable. That ability to define could become infinitely more valuable than the ability to build.
A potential radical restructuring of the tech workforce, moving from builders to architects of intent. Definitely something to chew on as these AI tools become more pervasive.
Food for thought, certainly.
Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.